There hasn't been much time for investors to think about a summer break, it seems. There's been a lot going on just here in the United States between the stock market, politics, and the economy, just to name a few things. Our chief equity strategist and economist, John Blank, is here now to add some perspective to everything. John, the recent better than expected inflation reading seems to have had investors pricing in a higher chance for a Fed rate cut in September. What do you think?
Well, Terry, I'm speaking on the July the 25th, and we got a 2.8% advance estimate for the second quarter GDP for the United States. So we need to add that to this discussion, and that is above trend by 0.8% on a 2% long-term trend growth rate. So while inflation is declining, the overall U.S. economy is performing above trend growth. So I do think on the aforementioned CPI decline, we will get a September rate cut. But I think the idea of a 50 basis point rate cut, which was building the last few weeks, is off. And the idea of a July rate cut is off as a result of today's GDP report.
Stock market's move higher has been largely about AI and related tech stocks, but now we're seeing rotation away from the big tech winners. What areas of the market do you see benefiting from this?
Well, Terry, one of the things I'm struggling with, in my own asset allocation is I kept the market weight on mid caps because they are showing profitability, and I actually lowered my rating on small caps because the S&P 600 is so heavily weighted to finance companies, not tech companies. I think there's a misappropriation of the rotation, and I think people are going to look to profitable companies in the small and mid cap land, but not necessarily the small cap index because it's so heavily weighted to the finance companies, which frankly, may carry the burden of this office adjustment from remote working. So I am a little concerned that there isn't even much of a rotation going on other than some kind of revaluation because they were so beaten up, some short covering, and also just a rotation on value, but not necessarily growth. So I think the idea here needs to be more nuanced and complicated than it has been presented.
It's interesting. What story do you see the Q2 earnings of the big tech stocks telling?
Well, so far we're seeing, that the CapEx build was real in AI cloud data centers. But what's not real is the value propositions of a lot of these AI companies, and they're getting sold off. So, again, we're seeing the scale players and the well-built companies, holding up pretty well, but everything else getting sold off if there's even a whiff of a problem with earnings.
So is it not time for investors to take some profits from their big tech stocks?
Well, there's always time to take profits, Jerry. I think now is certainly a good time because you can park it, because of the Fed higher for longer mentality at a 5.4% CD rate. When you can make that much money without any risk, it's always a good time to park some cash.
And if there is a stock rotation, how is it influenced by the economy, especially with signs of cooler inflation?
Well, it's influenced by the economy in the sense that the major driver of, I did this work years ago, but it's consumption growth in the next quarter ahead that drives stock returns most in the GDP account. So the consumer holding up in this GDP report and holding up next quarter is going to keep the bid on a lot more stocks than people realize.
Inflation and higher interest rates have tested the resilience of households and consumers for a while here, but June retail sales were flat after Wall Street was expecting a slight decline, and May sales were revised a bit higher. So does this, along with the recently reported better than expected inflation data, help to support the expectations for a Fed rate cut in September?
The main thing to think about here is we've gotten rate cuts in the Eurozone and Switzerland, and we've got the idea up in Canada now they've cut. So basically, our real interest rate is about 2.3%, and it's usually around 1. So there's basically 5 rate cuts where the Fed can get to where it likes to be, which is a 1% real rate. So the idea of a rate cut in September really is prefaced on getting the Fed's overall tightness to kind of a 1.5 to 2 area and not necessarily 2.5 anymore because the pressure is coming off and they need to line up with their international counterparts and also with the lower inflation rate that's out there. So it's a much more nuanced targeting of the slowly declining core CPI.
And with politics being a large focus, and given the recent turn of events in the past week or two, has the market even priced in a victory for either side yet, or is it too early?
Much too early, particularly now with the shifting of the candidates on the Democratic Party side. And there's just an enormous amount of poll rigging that's going on across the media spectrum that makes it absolutely worthless to figure out, and particularly in a unique situation like this. So the market generally doesn't care about elections, which might surprise a lot of people. And it certainly is not going to be able to have a very good read on this one.
Okay, let's look at a few strong buy stocks now, namely Micron Technology, Arista Networks, and Shopify.
Yeah, Micron Technology, we got it at a number 2 rank, Terry. Its target price is 135. You can buy it for 110 after the sell-off. So got a nice entry point for Micron. I don't think there's any more to say about that other than, this is a top semiconductor memory stock, and that industry is number 4 on 250, top 2% there.
And Arista Networks.
Arista Networks, this is the darling stock of the momentum traders. We get a target price at 396. You can get it up for 325 after the sell-off. So you got a number 1 buy on it. I'm not sure I'd jump on this today, but you got to like watching this stock for an entry point now that it's got a pullback.
And Shopify.
Shopify, this is a name, I think they're based up in Ottawa. It's a Canadian company, and they are looking at target price of 73, and now you can buy it for 59. So again, in this sell-off, a number 2 ranked stock like this with an A for growth and an A for momentum, definitely got to put it on your buying list, because it really does have a nice position, and all the analysts that covered it. It has a lot of analysts cover this stuff, 17, which I almost never see that many, are telling you this stock's a buy.
Okay, our chief equity strategist and economist, John Blank, on stocks, the economy, and any potential political impact on the market. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.